Good evening. It's 5:28 p.m. Eastern Time, Friday, October 11th. This is Richard Pawson. And this is a little update on the stock market. We're doing something outside the Pawson report, something a little different here. And this is the weekly chart of the S&P 500 index, cash index. And I want to show some of the cyclical trends that are going on and discuss how this is aligning itself with the current debt ceiling and shutdown government, as well as this massive turnaround this week, which we've been calling for. We just felt like there's going to be a surge coming here. But first of all, let's look at the cycles. We have an L2 cycle that can create an uptrend, downtrend lasting 1 to 2 months. It's a minor intermediate cycle, and I just traced it out for bottoms. And now you can see for tops. And what's fascinating is this is actually working very well throughout this year. Nice little roller coaster with a long-term bullish bias pattern. Okay? Now, what I want to point out is that during the December 2012, an L2 bottom was placed. However, it was placed 1 week earlier than allowed for the earliest allowed, I should say. And we correctly forecast and used discretion that we better not wait on the model to find the bottom because it's going to miss it. And we are allowed to have a certain amount of discretion built inside the model. That's my model, and so I'm also going to have my opinion to it. And we correctly called that because they fixed the fiscal event, so it didn't turn into a crisis, and we got a huge explosion for a week of December 31st, meaning actually the first week of January. And then notice it never looked back. Minimum variation trend just kept marching up, so it never even gave us a chance for a truncated bottom. You know, I would have been happy with a slap down, but not back to the December low, and then snap it up and then say, oh, it's just a very distorted, strange-looking pattern, but here's your true L2 bottom. And we actually contemplated that. We actually forecast that throughout the year. That is an alternate model forecast. And that forecast simply says you can still bottom now, but it would be for an L2 rather than L1, and it doesn't change the forecast for our bullish opinion for now into next year. So at any rate, this is the best model script, but it's saying, oops, bottomed 1 week early. But it then settled down and just traced these cycles out just the way it's supposed to, just like clockwork, until this week. And this week we warned, we're suspicious that we've got an analog here. Another oops. And it's very similar to December 2012 because here we are, shut down government. And granted, maybe they didn't shut it down last time, but they were worried about it. And granted, we didn't go over a fiscal cliff, but we worried about it. But we fixed it. We were worried about it again, and they knocked the market down. Dow was down 6%. I think the S&P 5%. The R2000 and the NASDAQ stayed up into October as they should have. And then I said, watch out, they're going to try to knock them down to catch them up with the Dow and S&P 500. So they knocked them down about 4%. Now everything has snapped back. Yesterday they snapped them back 2%, all the indexes right across the board, at least the indexes we follow. And so we've got this big, massive, positive reversal week, basically erasing 2 weeks of decline, an outside week compared to last week, made last week look like child play. They punched it down through what I'd call a long-term trend line of support, slammed it right back above it, created a candlestick hammer pattern. All right? I mean, that's just fantastic that they bounced it off this line, and all those cycles, well, not all of them, but a few of them at least, were bouncing off that line. The others stayed above it. So I think we've got an analog here, that this is behaving much like December 2012, and for all we know, this thing can march up the next few to several weeks, non-stop minimum variation trend. Okay? So I think this thing has already bottomed. We've used discretion like we did in December 2012, and maybe we're pushing something here, and the odds are against us of being right twice in a row. But we've used discretion and saying the cycle bottomed ahead earlier than allowed. And we are bullish all the way into mid to late November, maybe December. Okay? Now, how about tops? Well, this particular top actually came in a week to even 2 weeks, depending on which index you look like, earlier than allowed. But again, I think it was caused by this concern over this debt ceiling. They started selling early. And the interesting thing is they sold the Dow Jones harder and faster than they did the S&P 500. which in turn was sold harder and faster than what they did with the Wilshire 5000, and which in turn was harder and faster than what they did for the R2000 and the NASDAQ. In fact, the R2000 and NASDAQ stayed up a bit longer. They were the renegades, and they stayed up into October and put the appropriate top in. Then they snapped down. Now they've snapped back up. So far, we've been on the right track. We said this was the possibilities this could occur. So we now think what's going to occur is either the market's snapping back to this trend line, and maybe it could then put in the more appropriate L1 top instead of being early. But it might just snap back and still find support at this trend line, meaning it won't trade any lower than 1686 or no lower than what we've seen going into the close of this week, 1703. And it's a truncated bottom and an L1 bottom, and it just takes off anyways. But rather than wait and see and chew our fingernails and fret, is this the time to buy? I've been saying all week long, buy it, put a stop on it, you get stopped out, go put a stop above previous daily highs and buy on the way up then. And if you'd done that this week, you would have caught this thing. You might have had a little bit of loss on the way down because we started buying late last week into this week just to be safe because we were concerned there was going to be a big surge higher. Well, we got the surge, but now I think this thing's got a much larger surge. You should be already on board. You should have captured some of this big positive reversal if you had been following our research. And we just think there's now a bigger surge coming all the way in towards Thanksgiving, and when the S&P 500 could trade to 1780s to 1817. My guess is 1780s, 1790s, however. But there are other analysts who are, some of them are actually mega bears still looking for that ridiculous crash and end of the world scenario, but at least they're intelligent enough to say there's going to be moments where we have to back up and say, hey, you can make new highs. And those particular type of analysts, I don't follow them closely. I just try to catch up with them once in a while. But they've been saying for a while now, there's another big move coming before we'll get back on track to our crash. Well, I say they're wrong on the crash. They're ridiculous, but at least I like to see those kind of people, analysts, traders, come up with a bullish scenario for at least one last run-up at least. And they're calling 1740, 1780. And we've got studies calling that for as well. It's just as of today, our studies bias something a bit higher, something better. So I think a big up move's coming, and here's why. Hedge funds have been way behind all year long. Managed futures people look ridiculous. They've missed out on everything this year. They really blew it, okay? Now I'm talking about indexes of these groups and these types of investments, averages. But my guess is everybody's planning the year-end campaign. I got back in the office in August, and I said the same thing. Got a plan for year-end campaign. Wrote about it in September. Well, I think we got a campaign. It's bullish towards year-end at least, maybe to year-end. And our long-term cycles are bullish in the next year anyways. Okay? So I think we got much higher coming. These people calling for 1,800, 1,900 S&P 500, they're probably going to get it. I think early next year we'll see 16,400 to 16,800 Dow Jones Industrial. Okay? For this move up for November, I think the Dow can trade to 15,900 or something like that. I want to point out one other thing, or a few other things. Notice the 5 week stochastic was overbought back here in December 2012, turned down for sell signal, and everybody said, oh, this is it. And what if we go over that fiscal cliff? This is just going to extend on down to oversold, and the market's going to crash. Okay? Instead, all it did was pull back from overbought and turn for buy signal, ran to very overbought, and stayed pegged for a very long time. Anybody selling because it was overbought was a fool. It just kept marching higher and higher and higher. And look at this. When it finally gave them another sell signal, what? Gave them a week, 2 weeks, week and a half, something like that down. Snapped right back. Didn't even leave the overbought zone. And then just stopped out all those bears again. Let them dry again, okay? Well, granted, maybe history won't repeat this time, but look at this. Went to overbought, turned around, barely made overbought, by the way, turned around, it's bearish, it was a sell signal, but look at this big positive reversal. That was so fast it caught this indicator off guard, and this indicator has a narrow spread, much narrower than the last time. It would be very easy to turn that up for a buy signal. If you can close next week fairly well, we got a buy signal coming in that stochastic indicator. I say they're going to put it right back to overbought just like they did last time. Again, another analog relating to an oops of when people were foolish to sell stocks because they were so worried the end of the world was coming and the U.S. was going to crash and burn and the government was going to screw everything up. Slowly but surely people are learning that, yeah, maybe I have to sell some to kind of protect myself. And yes, we have to do something stupid like just selling on the stops and getting stopped out, and the dominoes keep tipping over, and it's just a process. And then we got to go through that miserable, ugly process of buying on the way up. Can we buy in at a lower price? And you know what? Most people can't do it. They never seem to really buy the lower price, in my opinion. If you have big down moves for a very long time and you're the type of trader that waits a long time, you can buy a better price. Most people, however, are willing to jump right back in a little while after they get stopped out. They do that multiple times, and in the end, they lost just as much as if they stayed in. Okay, so bottom line is, I love this action here. Something can definitely go wrong. Maybe something can go wrong in the sense of going over the cliff, but I seriously doubt it. I think the government has sent the message they're not going to allow us to go over the cliff. The whole world's watching this. Everybody's concerned over this. Congress has woke up that they got to act a little bit mature. So the bottom line is, I really love this action. I think this stock market's going higher. I think it's going much higher even as of this year. Maybe I'll learn that I'm somewhat right and that it went higher but not much higher. I don't care. If it's a slower pace, fine. It's probably going still higher next year if we're right on those longer term 3-year cycles. And let's face it, the 9-year cycle is bullish for the rest of this decade. It's bullish for the economy for the rest of this decade. This could be very, very interesting. We got the proof. Unemployment's coming down. The world's improving. But at least for this particular video, I just wanted to suggest that this can rally into an L2 top. And if you can put the L2 top higher than this L1 top, you trigger a rule in the model for an automatic forecast for a future L1 top early next year to be higher than the L2 top, and I would dare say at least nearly as high, but the best forecast would be still higher. This is going to be very, very interesting, folks. I like owning stocks. I realize it might trade within these two lines. I realize it could turn sloppy and choppy on us. I realize the original call for this L1 bottom would have been probably at the end of October, so something else can create some other downside fluctuations. But I'm just a little suspicious. This could be much stronger than people realize. The real bottom was right here this week. Thank you. Again, manage your risk. Put your stop under. Check out our website, ag-financial.com. Take a 1-week free trial there and kick the tires. Look at all the 30 commodities and the various financial markets and our macroeconomy videos and our printed reports showing our model charts. Give us a try for a week. I think you'll sign up and try us at least for a few months. My guess is you'll be with us for a very long time. Thank you.